We've now passed July 1st. Happy Canada Day to everyone. And July 4th. Happy Independence Day. And we're now in the second half of 2020. Today, we're going to be going over with Delta 9 and John Arbuthnot, the CEO. We're going to be talking about what happened during the first half of the year and what's in store for the second half. But just as a really quick recap, bear with me as I attempt to do this in 60 or 90 seconds. I'm going to go over all the different things that John and his team have been able to accomplish within the first half of 2020. It started off on January 6th, where they had a business-to-business update. They're talking about how they had sold 89 grow pods in 2019 versus 6 grow pods in 2018. That's 5.6 million revenue compared to 0.24 million. Then on January 27th, they increased their grow pods to 297 grow pods. That production's up to 1.3 million grams. They released 7.18 million grams released for that time. And the total cost per gram was down to $1.04 from $1.21 previously. They then announced the milestone micro cultivation agreement that allowed them to see their grow pod system when given to a micro cultivator. They now, with that grow pod system, got their Health Canada license, thus proving that method works. And there's much more to come after that as well. We went into a supply agreement with Auxly for the Delta 9 stores, providing 2.0 products like edibles and all those different things we're now seeing in a bunch of stores across Canada. There's then their Q1 financials, or their end of year as well for 2019, where they saw the largest growth the company has seen to date. If you look at the record operating revenues of 31.8 million in 2019, that's up 315% from the year before. Their retail revenue grew 390% to 15.4 million in 2019. Their wholesale revenue was up by 336%, and the business-to-business revenue, the grow pods, was up 574%. Much more details to come. We're going to go back to that a little bit in the time to come here as well. Then on April 9th, they had a second micro cultivator who's using the grow pod system get their license from Health Canada as well. So that system we're going to be talking about in detail in this interview, but that's starting to prove its proof in the pudding right there as well. Then if we look at the April 13th, Health Canada approved the processing facility once again to be fully automated with things like packaging and capping and labeling, further taking down production costs. But we also paused phase 2 expansion during that time, another thing we're going to be talking about very shortly here. Then, of course, the Q1 for 2020, where once again, revenues continued to rise. We had operating revenues of 11.75 million for that quarter. That's up 109% from the same quarter last year. Many more different details of continued growth and profit margin, continued improvement in production facilities and everything they're doing, and a lot of great results that you can easily go to Delta 9 or to FTMINVEST.com to see all of those specific points. Then, of course, we hit June 1st. You acquired 2 new stores in Alberta. We'll speak about that in detail. June 9th, they opened their first store in Alberta. June 15th, enters Newfoundland and Labrador through a minor acquisition of interest in Oceanic. June 16th, working with the Manitoba Hotel Association to help bring D9 cannabis to hotels. We've actually got an investor question specifically on that. We're going to go into detail because that could be very, very fortuitous for the company. And then June 23rd, enters supply agreement with Ontario, making it the 6th province that Delta 9 is in: Manitoba, Saskatchewan, Alberta, BC, and Newfoundland. So without further ado, to talk about some of those things and to talk about what's going to come up in the second half of 2020 as well, John, welcome back.
Brandon, thank you for having me. That was a great 6-month overview. Thank you.
Yeah, I tried to get it as quickly as possible in there. I was looking at the news like, it just every couple of weeks there's something coming out. But John, we've spoken about this a lot on our network and interviews with you. One, the transparency of your company, but two, you're continuing to get things done. A lot of other companies are falling off. I strongly believe, as do you, your company continues to push forward. What do you attribute all of that to?
Yeah, I think it's a focused approach. I mean, we've been laser focused on execution for the last several years. Really has been a head down approach toward producing positive outcomes for investors. We feel very strongly that the financial and operating results should tell the story. Obviously, we want to keep investors informed and updated on all these material events, and I think that summary, tells the story. Every single one of those news announcements was something that we had likely alluded to, was something the company was going to do into the future. Our focus then is to get that done. So whether it's entering new markets like Newfoundland or Ontario as our supply capacity has come online, whether that's building out additional retail stores or acquiring additional retail stores, expanding our retail chain, working with our micro cultivation partners. It's all of these critical milestones that investors, we feel should look for companies that are really executing.
Yeah, and I'd absolutely agree. And why don't we just jump into a few of those because there's some that I know are of interest to myself, especially. Like I'm very curious about it. But a lot of investors have been talking about this prior to this interview. We always go to investors to ask them what they're thinking about. And one of the biggest ones that we kept getting back is Ontario. Ontario, although very shut down because of COVID, it's starting to slowly open up. The stores have been really expanding. And just a few weeks ago, you announced that you had a supply agreement with Ontario. Can you give us any type of update about what how that's going and when do you expect product to hopefully be able to be shipped out
Yeah, so I've been working on that for some time. Obviously, working through the onboarding and due diligence process with the Ontario Cannabis Store to become listed, to get our first products into the market. We're now through the legal portion of the agreement. Again, finalizing the onboarding with our team here. We're confident that we will see the first products from Delta 9 in Ontario, both at retailers and through the OCS into the third quarter here. So obviously for us, I think, our wholesale business very important. We've seen over the last few quarters the competitive forces in the wholesale market have really ramped up. It's a competitive environment. There's downward pressure on pricing. This has resulted in relatively negative results for a lot of pure play wholesalers across the space. So for us, as we've ramped up our production capacity, becomes increasingly important that we bring on new markets to see new avenues for our product. And we've always taken an incremental approach, one foot after the other in terms of adding these supply agreements. But just over the month of June, to be adding Ontario and Newfoundland, two new market outlets for our product, I certainly think that creates an exciting environment for us for Q3 this year to start to get our products into these markets and start to introduce consumers to Delta 9 cannabis.
there? Yeah, absolutely. And we're going to jump into those retail stores in a moment, but there's a little bit of an infographic that's going to pop up right here that shows the your retail sales for Delta 9. This was based off of 2016 numbers when it comes to the companies we're comparing it to. And this was off of, I believe it was Q3 of 2019. But when you start looking at the amount of revenue you're getting per square foot, it really was elite. Looking at this infographic, number one in America was Apple at $7,241 per square foot. Tiffany and Co. was the number one jewelry, $3,853 per square foot. Lululemon for apparel was $2,036. Then you look at Delta 9. I know these numbers have changed a little bit since then, but I wanted to show what these retail stores can provide you as a company. Then we'll talk about how you continue to add them. Delta 9 was at $3,200 a square foot. Like that's fantastic. And since then, you've been adding more stores. Is that retail part of your company? You got three large pillars to Delta 9. Is the retail part really exploding? Is that something you're putting more attention to as of late?
Yeah, certainly. As we pointed to in recent investor updates, through the COVID-19 crisis, retail has really been, a main part of our business that's driving us forward. Increased foot traffic in the retail stores, increased sales through our online platform for distribution, direct to consumer, click and collect. All of these things have been very exciting for us through the end of the first and second quarter this year. Retail is very important for our overall strategy. It's not only positioning Delta 9, putting our brand out there in the community. It's driving distribution of Delta 9 product. Over Q1 this year, company had, I believe it was about 5.8 million in retail revenues. Important to note that about 36% of the products sold through Delta 9 cannabis stores in Q1 was Delta 9 produced product. So it's driving distribution of our product right to the end consumer. And there's no better way for us to be channeling our product through to cannabis consumers here in Canada than to control retail. So when we look at bringing on additional stores, it's not just adding to the top line and by having another retail location. It's not simply a marketing or branding exercise. It's not something that we do just because we like being engaged in retail. It's something that is driving distribution for our wholesale business. It's a part of this vertically integrated model. that we feel will be successful in the Canadian marketplace.
Yeah, absolutely, and especially with the Alberta. I mean, you've now got two stores opened up in Alberta, if I'm not mistaken. What is the first? I know you can't say certain numbers because you got to wait until you give guidance, things like that. But what's been the reception so far? What's it been like entering Alberta and having those stores open so far?
Yeah, so it's an interesting test case. We opened our store in Calgary early June, our store in Grand Prairie late into June. So only a few weeks of results here. Keeping in mind that particularly in the Calgary situation, downtown Calgary is um, I'll say quite thinned out due to COVID. Not a lot of office towers are being occupied. The plus 15 Skywalk route, which is where our store is situated, is still closed, at least in terms of our section. So, really limited traffic in and around the store, but has been very positive to see the reception from consumers, coming in spite of very little traffic. And seeing them really lean towards even the Delta 9 branded products again, to emphasize the importance in the sell through of Delta 9 products, I think has been quite positive. The Grand Prairie situation, I think the real positive takeaways for us is that, even just coming out of COVID and seeing the Alberta market start to open up, even with very limited advertising, and getting into a market where there are already 8 or so operating stores for a population of 70,000 or so, call that a saturated market, that we're seeing that uptake from the consumer. We're seeing week over week sales improve, foot traffic improve through the stores. So, I think all of these, again, very positive takeaways. We're certainly not anticipating that with any of these store openings, particularly in a competitive market environment like Alberta, that we're going to see an explosion in lineups around the block like we saw in legalization a few years ago. It's simply not that environment. But all of these are building blocks towards additional retail revenue, additional wholesale revenue as we drive distribution through the retail. So, I think important first steps for us in Alberta, as we've announced or indicated for investors, the most important part of that acquisition of the Modern Leaf stores of those two Alberta locations was to get through the organizational due diligence process in Alberta to situate ourselves for additional acquisition in that market or organic store openings. So, both of those are under consideration right now. And now we pivot our focus back to, how can we continue to grow and expand in these markets, given we are seeing those initial successes in the business model.
Hey, and I appreciate that really down to earth answer to that as well, because everyone has to understand that there is a situation with COVID and everything that's going on. But what I like to see with companies is that nobody just stops. They don't stop everything. You want to keep seeing improvement. You want to keep seeing people get into new markets because it's like you said, that's going to continue to increase week over week as more of these lockdowns and different provisions that the government's put out, they're starting to pull back on them. People are starting to feel more comfortable going back into work and going over to different places. But in the long run, getting that footprint, making sure you're in these provinces is very important because then you're going to be able to really tap into each and every single market or getting there, it seems like, throughout all of Canada. So I like seeing those types of things. Same with the Newfoundland and Labrador. That's a very interesting one. Can you speak a little bit more? And that's actually a very recent news release. Can you speak about that minor interest acquisition that you took in Oceanic?
Yeah, absolutely. So this deal, it kind of plays into two of our business segments. So the Newfoundland market, firstly, it's quite closed off. Large number of retail stores already existing per capita. Big players in the market, Canopy, Oxley. I believe we have Loblaws distributing product in retail as well. So, there's already some big players in that market from a production, cultivation, manufactured product standpoint and retail. The province isn't necessarily accepting new wholesale partners. So it's a fairly closed market when it comes to the brands that are operating in that market. Again, this plays into two of our business units. So the firstly is our B2B unit, where effectively we've signed an agreement to collaborate with Oceanic Relief. They are a local Newfoundland-based pre-licensed producer. They're working through the Health Canada licensing process right now. The phase one of the facility is completed, about 15,000 feet. The phase two area, about another 45,000 feet. So facility in aggregate will be about 60,000 square feet, I believe targeting about 4,000 kilos per year. So I'll call it a good mid-size cultivation facility, certainly larger than many of our micro cultivation partners. Um, the deal with Oceanic gives us a 5% equity stake, 5% ownership in Oceanic's business. Um, we will provide consulting and licensing services, help them through the Health Canada licensing process, consult on facility design, really the rollout of their cultivation platform over the next 12 months. So that's how Delta 9 becomes involved, providing consulting services essentially in exchange for equity in the company. The other important component for us and the real value add then brings us into the wholesale business where we've entered into a supply agreement with Oceanic and with the government of Newfoundland. So this gives us an entry point into the Newfoundland market from a supply perspective. Again, over Q3, we anticipate now first shipments direct to consumer and direct to retailer in the market in Newfoundland. So again, another important market for us in a fairly closed off environment. I think to have a strategic relationship with a local cultivator who's also opening retail stores, so a similar vertically integrated model in the Newfoundland market. I think it's one of these business relationships that we've been able to build through our B2B unit that is also going to be quite beneficial now to our wholesale business. So, again, it's these one after another steps and milestones that become increasingly important for cannabis companies to demonstrate that they're continuing to execute in a difficult market environment.
Yeah, and you touched on three different things I want to make sure we still speak on throughout this interview. One of which you quickly mentioned Oxley. I'd like to get back to that in a moment. The other one is expansion. Talk about your facility because go over a little bit of a COVID update, as you know. I'm sure it's always on investors' minds, but more specifically to how you're partnering with Oceanic and how you're helping them with the licensing process, I should say. But then also your B2B, your selling these grow pods and those two micro cultivators who now have their license. What does that mean for Delta 9 to see that process go through? Health Canada said, yep, you're good to go as a micro cultivator. And now you could also buy their product from them and get some nice craft cannabis throughout your store. How big are those two announcements for you?
Yeah, absolutely. So, I guess firstly on the B2B side, large number of projects obviously that we completed over last calendar year. You spoke about that in the half one update. Um, we announced early this year our first micro cultivation partner, because you can out of Alberta had received their license fairly quickly after that. Our second micro cultivation partner, Oliver Acres or Cypress Craft, right here in Manitoba, was licensed as well. So it's one thing for us to sell equipment or grow pods, provide these consulting services, but you now start to see these critical milestones coming in for our partners, getting their licenses, now up and operating, cultivating high quality craft cannabis. So, we're obviously excited. I think this is a validation of that B2B business model. We can take a new startup business, we can provide the infrastructure, the platform, the services to get them licensed and get them operating in a difficult cannabis industry. So I think speaks to the merits of that business model. Now, as those micro cultivators are producing product, as you mentioned, we are able to bring that product into our facility here. You mentioned as well, we were recently licensed for our purpose built processing center, fully automated bottling, labeling, tax stamping. It hugely increases our throughput of materials through our facility and our ability to bring these products to market. So now to be collaborating with these craft cultivators whose sole focus is high quality cannabis products and being able to bring those through to our different distribution markets, which we're adding distribution markets as the supply is coming online, really is a validation of that B2B model. And now to have contracts like this Oceanic deal coming into play, which is a much larger project than a simple micro cultivation project, I think again speaks to the merits of that business model. But we're always learning through this process. Every time we work with an applicant on a Health Canada application and license through the licensing process, we learn how to refine those services, make them better, make them faster. I think there's that rapport that we've been able to build not only with our clients but with Health Canada through this process that becomes important for the long term for those business relationships.
Yeah, and you said it right. Like it's so nice to see a lot of the things that you and I have been speaking about for a long time, especially on our platform as well. About this is what I want to do. This is how I see it happening. Here's the three pillars of my business. You haven't swayed from any of those. You continue to push forward that, not just push forward with it, but having success with it. So it's great to see. You also have a deal with Oxley, but it also leads just into 2.0 products as well. 2.0 products have now been around for about 6 months now, depending on when they were able to get onto shelves. What have you seen with either that relationship with Oxley or just how people have been responding in your stores to all of these 2.0 products? Do you see a large increase in these items compared to, say, your normal flour?
Yeah, it's a good question. In terms of the response to 2.0 products, the response out of the gate was tough to measure. We would get in shipments of these 2.0 products, vapes, edibles, etc., and be sold out on the first day. So it was tough to get a sense of the overall demand. I mean, the demand seemed to be there, and yet I think in our first month of 2.0 product sales, it made up less than 10% of revenue. So it wasn't necessarily a significant impact category from a revenue standpoint. Now, you look then at Q1 in aggregate, we started to see that a little above 10%, but still running into, I would say, significant supply issues, particularly around the edible products. We saw over Q1, the vape segment started to become well supplied. I think to a point, end of Q1, we probably had 18 to 20 different vape products in all of our stores at any given time. The packs platforms for a few different suppliers with Supreme and Afria. We saw the 510 cartridges, again, a number of different platforms for the vapes kind of materialize over Q1. The edibles were still in short supply. Now, Q2, that's gotten significantly better. So we're now starting to see a recurring supply of the chocolates, the gummies, which are I think, a particular high demand item in the gummy or chewable segment. Um, Now the drinkables. It was just month of June when the drinkable products from the largest suppliers, Canopy, et cetera, started to become well or consistently supplied in the stores. And now we're starting to see again month over month uh, a larger percentage of overall retail revenues coming from these 2.0 product categories. It's giving us, I would say, invaluable intel into what of these categories are working, what's not working, what's oversupplied, what's undersupplied, and starting to really gauge the consumer on, what are perhaps the long term trends that we can take away from these initial first months of sales. So, I think the first issue and our sense on the 2.0 products was this was going to take a full year to fully develop this market, the supply chain, the supply side, to get these products on a recurring basis in front of the consumer and really start to get good market intel. But I think we're now to a point where the data that we're collecting is quite good. The competitive landscape is ramping up on the 2.0 products. We're starting to see prices come down. Where initial complaints from consumers on vapes and chocolates, some of the edibles, was that the prices were quite high. We now see chocolates priced in retail at $5. That's half of what it was 6 months ago. So, the competitive forces, I think, are certainly there. The consumer is excited. People are coming in now, and most recently, again, the drinkables are selling quite well. So it'll be interesting to see kind of how these trends develop over the next 6 months. But I think a very important tool in the toolkit for the legal cannabis industry was the introduction of these 2.0 products. Of course, the black market in many cases has been producing similar products for years. To have these tools as a retailer, as a cannabis business, to compete with black market, I think is quite important. So, I think has been great to see the introduction of these 2.0 products over the last 6 months.
Yeah, very detailed and interesting answer. I appreciate that. I know a lot of people who may not be paying too much attention to the space, hearing things like that provides a lot of information for them. They can kind of get a gauge for what's really been happening. And speaking of intel and information, very really really quickly on this point, when it comes to you entering Ontario. I believe throughout that news release, it was also talking about you being able to have a collaboration and for intel and different specifics on consumers. Is that correct?
Yes, so the Ontario Cannabis Store, they collect information from retailers. They aggregate all the information from all the different suppliers. It's part of the feedback that they provide for industry. So, I think it's been interesting to see, I guess, for us as we've rolled out into these different provincial markets. You have certain provinces that provide very little intel. We will get maybe a monthly sales report for how our products sold. Uh, we don't even know which retailers bought them. it's up to us then to do the outreach to the retailers to determine who's selling what products, and can we become a preferred supplier for a retailer, things like that. There's other markets like Ontario that are really seeing the value in data collection. And I think that allows us as a supplier to really refine our product offering, see perhaps where are there gaps right now, what's selling well. We've heard a lot about value products being introduced, value sizing in the 14 to 28 gram settings, and selling at prices as low as $5 a gram. So, for us, I think kind of guides us into, if that's going to be a meaningful segment, how can we approach that? How can we compete? Again, the more intel, the better. And really, that's where we see the value in being a retailer. But when we enter markets like Ontario and there is that opportunity for data sharing agreements, I think all the better for us.
Yeah, absolutely. Hence why I wanted to bring that up as well, because I find it very interesting. I know Ontario, over any other province, provides the most information, has the most information. As it continues to grow, I think that's going to give the best understanding. I could be wrong, of course, but I believe it's going to give one of the best understandings of what customers and consumers actually want. And if an LP or a certain company is smart, they would listen to those consumers. So, no, fascinating to hear that. If you don't mind, can we go on your phase two expansion for a moment? Because I know the last time we spoke, I believe it's just announced that you were pausing that for the moment. We spoke about COVID. How is it affecting your company? How is it affecting sales and things like that? Because no matter what, COVID will have effect on every single business throughout all of Canada. Uh, in your mind, where are you in terms of wanting to revamp that, push it forward, or is it still the time of, hey, let's be a little bit more cautious and let's really see what COVID could do, or maybe is there a second wave coming in the fall? What are your thoughts on that as a management team?
Yeah, absolutely. So, I guess full update for investors. As of I believe it was March 30th, we announced or essentially came out with a COVID-19 update. So as of that time, we had been notified that our businesses were being considered essential, both our production and wholesale business as well as our retail business. We were incredibly fortunate throughout COVID. We continued to operate our retail stores, as I mentioned, seeing increased foot traffic. Has been, I think, a significant positive for us through COVID. We were able to maintain wholesale shipments to all of our provincial markets. We were able to continue providing grow pods to startup businesses across the country, even down into the United States as well on a few shipments. We were continuing to walk through the licensing process for these business partners as well, albeit on a remote basis. Unfortunately, business travel obviously limited throughout that time. We also announced that we were pausing our phase two expansion. Obviously, conservation of capital, uh, really mitigating risk through a very uncertain market environment became the number one driving factor for us. So we paused our phase two expansion in terms of rolling out an additional, I believe it's 130 or so grow pods, would bring us up to 420 grow pods in total from our current 297. Um, so, I think was a very important step for us to take. Clarify to the market that we have an eye on conserving capital. We're not going to need to go to the market in uh, a distressed market environment, which as of end of March, obviously with the broader capital markets environment was quite scary. I think we've obviously seen, some stability in the broader market. Cannabis industry prices, I would say, have stabilized. We have seen, some run-ups and some sell-offs over the last few months, but overall, I think more stability than we had seen previously. So, I'll say the market is starting to stabilize for us. We are reconsidering our expansion plans. Right now, we're moving forward. We're expanding our Health Canada license perimeter. So this is into some already existing buildings we have on site. We occupy about 135,000 square feet here. Only 80,000 square feet of that is currently under license. So there's a lot of room for us to expand that perimeter. That becomes the first step in any expansion is getting that perimeter secure, making sure it's meeting all of the requirements of the cannabis regulations from a security standpoint. So all of that's underway. All of the capex has already been spent on that. So that's just working through the licensing process. It was really a risk way for us to continue to move our business forward from that standpoint. Now that we have our purpose built processing center, we're operating at capacity in our 80,000 square foot facility, about 8,500 or 8,300 kilos per year cultivation capacity. We're working with our micro cultivation partners on bringing product into the facility. For us, I think the more near term focus is on internal bottlenecks. So we see things like storage capacity, really the workflow of product as it moves from harvest to drying, curing, packaging, final packaging, laboratory QA and release and storage, and then ultimately distribution. Do we have adequate facilities for that? So part of our next expansion as well would be increasing our storage capacity, allowing us to warehouse additional product, really with an eye towards shipping large volumes of cannabis through the facility. Again, all of this work is underway. But for the time being, the larger capital expansion plans to add additional cultivation capacity and grow pods remains on pause for the time being. It is in the back of our mind, as you said, that we may see a round two. We may see a second wave. We may see another market correction. Equity markets have bounced back very quickly. I think the sell-off and the the uptick in the market have almost come at records. So we're cognizant that there's still a lot of risk in the market. I think the last thing we would want to do would be to barrel in head first on a $7 million capital expansion plan without significant confidence that there won't be again a large amount of volatility in the markets. So I think as things start to stabilize here, obviously markets, economies across Canada starting to open back up, starting to find the new normal. All of this does certainly build confidence for us, but I think we would want to see at least another quarter or so of things continuing to move in the right direction, and starting to see adequate sell through in our provincial markets, et cetera, before we would really look to see that the cultivation wholesale side of our business is the place to focus. I think for now, the real focus for us is, continuing to expand that retail chain. We've got partnerships in Manitoba to be expanding on. I know that's probably an upcoming question. We're continuing to build out retail stores. We're continuing now to take a new focus and look at potential acquisitions in retail. So retail, I think, will be very important for us. But over the long term, again, we'll continue to assess these parts of our business as we build out on our vertically integrated model.
Yeah, and once again, I appreciate the detailed answer. And there's 2 points that really stand out there. The first of which, making sure you're making prudent decisions with the money that you have. One of the biggest things cannabis investors are looking for is, do you have cash on hand? Are you able to fulfill your obligations for next quarter? And I know that we're going to be going into more deep dive in this in just a few weeks with your Q2 results coming out. We'll have another interview specifically on those. But I wanted to really point out an infographic I'm going to get our producer Wes to put up for ourselves here. What it is price to sales. And if you read the bottom of it, it says the price to sales ratio quantifies the share price value the market is assigning for every dollar of revenue a company generates. This ratio can be used to compare companies against each other, with a lower value meaning a company is undervalued relative to its peers. Now, this takes into consideration a lot of things, of course, but the median of these 12 companies is 4.41. John, you guys are at 1.01. You have a 1-to-1 price to sales ratio. And although I said next interview or in a few weeks, we're going to talk way more about your financials, this is massive for those that don't really look into a lot of fundamentals of companies. And that's okay. You're learning possibly, but this is a huge ratio to see such a drastic change from your competitors in a positive way. Do you equate that to a lot of these things that you've been doing with prudent decision making on expansion, with not going out there and just growing a fluffy business, but instead actually having real substance news releases and moves? Is that what led to this?
Yeah, I think this is a great metric. We've been speaking around our most recent investor updates that pound for pound, there's no company that bats above its weight class like Delta 9. We produce on revenue. We produce in terms of trending towards profitability, and now over the last 2 quarters, operating profits in the last quarter, positive adjusted EBITDA, positive cash flow from operations. Again, there's no one in the sector that has produced results compared to their market cap on a pound for pound basis like Delta 9. So I think this is the type of metric, certainly speaks to that. Interesting to see that even some of the largest companies, Afria, for example, trading at 2.8. Why is the market discounting Afria relative to its larger market cap partner or a peer group? Why is Delta 9 being discounted to a 1.0? I think speaks to some of the divergence in the market right now, where there are arbitrage opportunities for investors to look at the cannabis space and say, well, no, that company is significantly undervalued versus the space. That company is perhaps overvalued. But again, I think this type of infographic for people kind of demonstrates or illustrates that we haven't reached maturity in the cannabis space from a trading multiple standpoint. There's a lot of arbitrage opportunities for people to look into the space, do your due diligence, and find value. Again, at least I think is encouraging for me to see that Delta Nine's results are really outsizing us versus the market when it comes to a financial and operating perspective.
100%. Normally that'd be a fantastic way to end an interview. I appreciate how much time you put into this, but there is an investor specific question I do want to ask. We'll end on that question. And this investor was asking about the relationship with MHA, the Manitoba Hotel Association. I hope I got that right. And he's saying, I'm curious about their timeline in regards to their association with the hotels and motels in Alberta. Really curious how that'll work because the rules in Manitoba are a tad restrictive. What does this mean for your company, and how would this possibly look? Is essentially what this investor is asking.
Okay. Yeah. I mean, just to clarify, the arrangements with the Manitoba Hotel Association so would be limited necessarily to hotels operating in Manitoba, not Alberta. But their network does cover hundreds of hotels and motels here in Manitoba in terms of their membership. Um, you see everything from the large hotel chains involved to the very small, rural one-off hotel operators, a part of that association. Manitoba announced, I believe it was end of May, that on June 1st, they would be opening up to what we're calling phase three of retail. So currently, I believe there's about 31 retail stores operating in Manitoba, relatively low number per capita for our population here in Manitoba. Phase three essentially is allowing retail operators to expand, to add new standalone retail stores. But it also brought on a new class of license, which is called a controlled access license. So this would allow for sales in somewhere like a convenience store or a gas station or a hotel that perhaps has a beer vendor. Now, cannabis sales cannot cohabitate with liquor, but there could be a very similar setup to a liquor or a beer vendor that you would see in a hotel for cannabis sales. So, a part of this arrangement with the Manitoba Hotel Association, it effectively makes us their preferred partner. So that we can conduct outreach to all of these individual hotels and hotel chains, begin to start to work with them on their cannabis business strategy. So, rolling out either age restricted standalone cannabis stores or store in store or controlled access type distribution. Really will be kind of a not a one size fits all approach to the market. Of course, will be very different if we're working with a hotel chain on a franchise rollout of a number of cannabis stores versus setting up a smaller rural operator to be able to add cannabis to their business offering. But in any event, we felt it was important for us really to position in Manitoba, to provide a made in Manitoba solution for these Manitoba based hotel businesses to get into the cannabis space. They know the hotel business, they know in many cases the liquor business, distributing beer or liquor. Uh, they don't necessarily know the cannabis business. So we can bring that expertise in retail. We can bring that expertise for the cannabis industry, whether that's licensing or security, site planning, um, supply chain, inventory, category management, compliance, reporting. All of these are things that are going to be new for these hotel groups. So for us to be able to work with these groups, expand our distribution of Delta 9 products, expand our business relationships in retail, again, I think was an important step for us in our expansion plans here in Manitoba.
Yeah, and I appreciate that. I'm sure the investor appreciates hearing that as well. Very, very interesting to see where they take that because cannabis absolutely is going to start making its way into hotels and different things. Just like you can have a nice drink while you're at the lobby, there's going to be times where you can have a nice tea, you can have a nice whatever, and it'll be cannabis infused. That is to come. So very excited for that. And for anybody who wants to find out more information, one thing I did miss earlier is that you launched a new investor website. You can go to delta9.ca right now, click on investors. It goes over the three pillars of your company very, very well. It goes over a lot of different things, has past news releases and all of that as well. So, John, I appreciate you taking the time out of your day to be able to speak with investors, both new and potential, and go over all these elements. But you also put a lot of time with your team into your website that also provides a lot of information investors for as well. So, if you're hearing things that you like, if you want to look more into why, um, I'll be very confident in saying both myself and John believe that when you're looking at this company compared to others, there's a lot of a good argument for looking at, is this undervalued compared to its peers? Obviously, for you to decide, but that's why all this information is there for you to be able to access. But once again, John, I appreciate you coming on. I hope you enjoy the rest of your day as well.
Brandon, thank you as always for having me.